Hi there, welcome to Wyckoff Technical Analysis session for Solana. If you're new to my sessions, here are the key takeaways you can expect from my sessions. So let's start with the weekly charts. Here, the Solana charts is showing us that for 4 consecutive weeks, even though they have tested the key level of 180, they have been successfully staying above that particular key level. And it seems to be going through a higher low trend in terms of the wicks of these candlesticks. Alright. However, later on when we get to the daily chart, we'll see something that looks a little bit different. For Wyckoff stages, we have gone through another LPSY. So if you look at the candlestick, they look pretty flat. But if I turn it to a line chart, you see that was actually a peak over there. Okay. So what's next? Well, it's still traveling along this between the light blue key level of 180 and the blue key level of 210. There is a chance for it to fall outside of this upward channel that started back in April. So after over 6 months, we may be getting to a point where the price will eventually come down to show us a sign of weakness like we discussed previously. So when this breaks outside of this channel box, I'll adjust the possibility of this happening. Okay, that sign of weakness level is at around $125. That was what happened back in mid-June. Okay? So for now, the upside, there's still about 1/3 of the chance for the price to at least come up. Not necessarily an upthrust of the distribution, but or like a second test at around the 260 level. So it's not like zero yet. Okay? Before getting to the daily chart, let's look at the Bollinger Band and Corner squeeze. You see the purple lines. The top has been inside the orange since mid-June. Late June actually, mid-late June. The bottom edge got very close, especially when we got to mid-August. It deviated a little, but now it's getting back closer to the orange. So for the next 2 to 3 weeks, if the price continues to trade at a similar range as it has been over the past 3 weeks, the squeeze will happen. Okay, last time the squeeze happened, back in early August 2024 till late October that particular year, its first swing up and then it came down even deeper than where it started to swing. Okay, similar sense back in 2023, a year-long accumulation after that particular squeeze period, we've got that swing up. So if we look at that further up, we don't see any, but you see the purple lines are getting close enough to the orange, and then we've got those swings afterwards. And also, if you're new to this indicator, it doesn't only tell us, or it doesn't tell us which side the swing is going to start first. Sometimes it goes down first before it goes up, so be mindful if you're new to this indicator. So while we are talking about this, let's move to the daily chart because the squeeze has officially started for the daily chart. So let's expect some bigger price movements to come anytime now. Alright, even though the volume seems to be kind of consistent except these 3 days from 28th to 30th, you see they were at a higher level across the past 2 weeks. Okay, so enough for the squeeze. Let's get back to the Wyckoff tags. So we already said the LPSY has happened, not that it can't have another new LPSY. So here we've got multiple signs of weaknesses. We are potentially going to see one when the price eventually closes near the light blue key level of around $180. Okay, and then it can bounce up for a mini peak like this before it actually either come up or bounce back and breaks this channel. So now we get to the breakout timing. Here we see the price is getting closer and closer to this wedge. This wedge is formed by the bottom edge of the upward channel, the bigger channel box, and also the ceiling of the downward channel. Alright, that time point is around November 17th or 18th, so roughly 2 weeks from now. Okay, when the price continues to trade narrow range towards that particular corner, the big guys are going to tell us where do they want the price to go next. Is it going to continue within the uptrend that started sometime in early April? Okay, over half a year. Is that going to continue? Or is it not? Is it going to break towards the downside outside of this bottom edge of the upward channel? Not saying it's going to immediately break the 180. It can. So there are two ways that this can happen. Hey, good afternoon, Wolf Photo. So one way, if it breaks below the bottom of that box, it can trade sideways above 180. Okay, that's one way it can happen. So staying above 180 basically. Even if it go up to challenge and show us a second test, which we already talked about, that's still a possibility. The key is staying above that light blue key level of 180. If it doesn't break or like stay above 180, it's not something surprising as well, because we already said it has started a downtrend. Okay? Since late September. This downward leg from the upthrust on September 19th basically is the starting gun, and we've got these bounces along the channel. So it's not something unusual for this trend to continue until it finds a more solid support. So one is the key level of 150, this green key level, where we had our sign of weakness and automatic rally back in the middle of the year. Also the PSY period around late April and early May. Okay, that's one of the more solid support after the 180. Okay, there's intermediate support over here at around 165. So when the price gets to here, it may bounce as well before it comes to challenge the 150 if it really is going to break this upward channel and come down to test more solid support. So those are the first line of support. Second line of support over here. There's also another intermediate support at this level, the third line before the 125 key level. So here it's around high 130. Let me adjust the lines. High 130 or even gets close to 140. So this is where the line is. Again, the dip for the lower sign of weakness and also this dip over here, plus the backup and last point of support period back in April, and also the automatic rally back in mid-March, all lying around the same level of about 137. Remember, that's always a range when I say those levels. So it can end up a little bit higher or lower, not exactly touching the line, but you see it's close enough. Alright, so the picture favors more the bears than the bulls for the time being. And remember the key date I mentioned? Middle of this month, somewhere when we get close to the 17th or 18th. Obviously the breakout can happen sooner. Yeah, I see a couple of questions. What's your thesis on where the market is headed from here? from the looks of the Wyckoff, we're in macro distribution. Well, we are, technically speaking, still in distribution, you're right. But it seems like it's near the late stage of distribution. Looking at this Solana chart, if that's where the buying climax was, back in, let me change back to the chart view, back in February, March time, 2024, and the upthrust was in November last year, sometime similar time where we're now. There can be still a chance for the price to come back to the 260s to show us an upthrust of the distribution. So it's not entirely over yet for the distribution. Like I said, if it stays within this upward channel, that chance remains over there. But if it breaks below this upward channel, then the tendency is like what I shared. It's going to come down, potentially showing us these sign of weaknesses. And overall market, I would say it's not very optimistic and very unclear at the moment, because one very key thing is I shared in one of the sessions, I think last week or a week before, that a lot of people are saying lowering of interest rates is going to give the market a push. But see what happened when the Fed finally announced that, right? I talked about that in that session, that the big guys, the whales or the composite men, they know this at the beginning of this year or even before that. They have been expecting that to happen. So it's not that they're going to act like the retail investors to take action now when the Fed finally announces rate decline. So when they lower the rate, the big guys have already moved. They're not going to wait for the news to act. It's the retail investor that acts like that, right? So be really careful when those kind of news still come out and telling us to expect some kind of major move up, unless the governments around the world, especially the big countries, are saying they're going to print a whole lot of money. Then that's another story. Because if the money supply, or those M1, M2, M3, are going up, obviously the asset price, especially things like Bitcoin that has limited supply, that in relative term, those will go up. That's the case. And of course, you can take into consideration as well, like if the rate is coming down, then maybe there will be a weaker dollar, and that's why the relative price of crypto or Bitcoin is going to go up. That's another argument. But you see the complication of this, right? Because it's not just these factors, it's multiple factors getting together to have the end result that affect the price. Because when the rate changes, the big investors are going to reallocate their portfolio. That's going to drive capital to somewhere else. If they think they have made enough gain during this bull run in 2025 for Bitcoin or Ethereum or some particular altcoins, they are going to move the money to somewhere else after they have tested the market enough during this distribution cycle. Alright, they see people FOMO in up to a point the price can't get higher. And they know that's the limit of the retail investor for this cycle, and they're going to get away sooner than we do. And they're going to do it gradually until the point that even the small fishes panic and all of them flat all of a sudden, and then we drop back to where the long-term price range is. So that's a pretty long answer to your question about where the market is heading. It's not the end of the world. We know cycles happen. It's just that be careful of what kind of news are being sold to us. It's not like you heard the saying, sell the news, right? That's where it comes from. So thanks for joining me. See you in future sessions. Bye.